Hello and welcome, ladies and gentlemen. You're watching a very special edition of our programming on the upcoming union budget. This is going to be the first full budget of 2025, the first full budget after NDA 3.0 got voted to power again. So naturally, there is a lot of anticipation and expectation. Last year, ladies and gentlemen, the backdrop was slightly different. There were elections around the corner, so the focus of the budget and, of course, the industry expectation was whether government will ensure continuity. However, this time around, the picture is slightly different. India is still the fastest growing global economy, but the pace of growth is losing some steam. Now, GDP numbers for the July to September quarter hit a several quarter low, and the middle class is also facing the brunt of rising costs of living, and there is softness in consumption. So the big question ahead of Feb 1, or rather for Feb 1 announcements, is that will the finance minister's announcements reignite the pace of growth for the country while still maintaining the fiscal deficit target? Will the trend of capex push continue? And will there be a breather for the middle class with respect to tax eases? Well, and of course, the other big question that we are asking is, what is really India Inc. asking for? What are corporates asking for and expecting from the finance minister? To discuss those and more questions, I'm now joined by our guests who are joining us now, Mr. Vardhan Agarwal, President FICCI and Vice Chairman MD, Imami Limited, Anant Goenka, the Senior Vice President FICCI and Vice Chairman RPG Group, Vikay, Sankar, the Vice President FICCI and Chairman, the Samar Group. Thank you very much, gentlemen, for joining us here on ET Now.
Thank you. Thank you for having us here. Thank you.
All right, let me come to you first, Mr. Vardhan Agarwal. Last year, when we were speaking to various industry bodies and corporates, the picture was slightly different. Like I said, the focus was largely on whether there will be continuity in budget, in spending, and of course, that was the big key focus area of conversations last year. However, this time around, because of global geopolitical developments, you have a Trump 2.0 administration, you have slight bit of softness in the economy, and of course, hence the picture looks slightly different. What are your key expectations so far as the big picture for the Indian economy is concerned, and do you think the upcoming budget is going to kickstart the growth path, the growth cycle once again for Indian economy?
See, as you said, India is still, growing, is the fastest growing economy in the world. This year also we expect it to grow by 6.4, 6.5%. And some of the first half, the GDP growth, which was lesser, was also because, there was election in the Q1, which ultimately impacted from the perspective of the capital expenditure from the government side. But overall, yes, as a chamber, so what we believe as a chamber is that the continuity which has been there, the focus on development and growth, which has been there, which has been the part of the government's budget every year since last 4-5 years, should continue. And from that perspective, few of the recommendations which FICCI has given to the government are that, we should continue of the good work of increase in capital expenditure, because it has a multiplier effect. So, whether we have recommended that if it can be increased by 15% in comparison to what it was announced last year at 11.1 lakh crore. Apart from that, what can the government do to increase the consumption? Because what we all have seen that, yes, the consumption is something, where there are concerns. So how the budget can help in that, how it can help in giving a boost to the consumption. Apart from that, yes, what we have also recommended is how they can increase the outlay in the sustainability part, from the perspective of green energy projects and circular economy. And, what can the government do to for ease of doing business, because that will certainly help in the manufacturing sector, the Make in India sector, which is very, very important for the country.
Absolutely, Mr. Agarwal. Ease of doing business is something that several sectors are asking for. Of course, we know that the government has unleashed several policies to maintain that, and that's been the government's big priority. But will be interesting to see what the finance minister provides in terms of ease of doing a business. Mr. Goenka, let me get in your thoughts on the big question around whether India is in a structural slowdown or a cyclical slowdown, because that's the big conversation going around right now. And secondly, how do you expect the budget to intervene as far as that picture is concerned, and what have your key asks been with respect to several sectors?
Right. So I think no, India's story continues to be very strong in the long term. Yes, in the last 3 months, there has been a slowdown. There is some challenges on consumption as well as private investments. But I do believe that this will get corrected over the long term. We are finding capacity utilization rates to be fairly stable at this point of time. And as that continuously increases, I think we will see private investment also going up. Our recommendations in the budget have been in the interim to spur consumption. And the few areas that we focused on is simplification of tax structures to put some money in the hands of the middle and lower middle income class, to continue on the various schemes of Manrega and Gram Sadak Yojana and other schemes that are there. We also gave a recommendation of issuance of temporary e-vouchers to spur consumption, which have an expiry date so that initial consumption goes up. With that, we believe private investment will increase over time and should kickstart the economy further to higher levels of growth.
Right, Mr. Goenka, let me take the point about consumption, that consumption slowdown and the need to boost consumption in the country. And let me take that across to Mr. Vijay Sankar. Mr. Sankar, now this has been a big challenge to spur the growth of the Indian economy, as has been rightly pointed out several times, which is a consumption slowdown. There is softness in consumption. And that's been a key talking point as far as FICCI's recommendations are concerned, as mentioned in the pre-budget survey. How do you think the government could look at boosting consumption? Are you expecting an easing of taxes, or there could be more boost for the rural economy, or are you expecting more SOPs to boost consumption in the country?
Yes, so three parts to this. One is, as Mr. Goenka spoke about, temporary issuance of consumption vouchers is one of our key recommendations. The second is around the rationalization of the tax structure, both direct and indirect taxes, with a view to put more money in the consumer's hands. I think an increase in disposable income in the coming year in the hands of consumers will certainly give a boost to the consumption demand, which is much needed. The third is around food inflation, which has been a little high. I think what we have suggested from FICCI is that a food inflation response strategy team be set up to address issue of food inflation across the board. What are the causes? Can there be an e-enabled platform which addresses this, creates better information exchange across the agricultural system, which is still a very, very big part of the economy. So we think that if the government focuses on some of these areas, including many of which it has started up on the journey a few years ago, I think it will certainly help boost consumption, which we think is going to be key in the coming year.
All right, Mr. Sankar, let me take the point across to you, Mr. Agarwal. Now, rationalization of taxes or addition of a new slab is something that's being spoken about. What do you think? Could we be in for a surprise with respect to rationalization of taxes is concerned?
See, we all know that government is very concerned about the overall, the challenges related to the consumption, and how do we take steps, so that it will give more disposable income in the hands of the consumers, so that the discretionary spend also increases. And from that perspective, certainly, relooking at the tax rate and structures of the tax is maybe one of a good thing. And we are hopeful that, government we might see something in that regard, in the coming budget.
Mr. Goenka, let me come to you and speak a bit about the rural economy. Now, consumption, of course, did pick up after a slow start this year, but there's much work to be done there because of, the stress that is currently existing, and that is also due to climate-related factors, and that is being considered as a headwind to overall challenges that could be facing the Indian economy's growth. So, what are your suggestions to give a boost to the rural economy and the agri sector in particular? And are you asking for, measures to also mitigate the impact of climate change, because that could have a big bearing on the agri sector and hence the rural sector as well?
Right. So the rural sector, fortunately, has been doing much better in the last 6 months. It was an area of concern before that. If you look at from our tire manufacturing perspective, two-wheelers are growing at the fastest pace that they have in some time. Farm sector is doing well. And those are all positive signs of the rural sector. We have a few recommendations from FICCI side on what can be done to further enable farm prosperity. And a few of the actions that we recommended was to look at an agri-yields mission, focus on the bottom 100 districts, and focus on using technology to improve yields for these farmers. The second is getting about 3 million technicians ready in the longer term. We have about 6 lakh villages, maybe 5 or 6 technicians per village. So you're talking about 3 million technicians to be trained to help in, again, future tech areas in the farm, such as use of drones, micro irrigation, and other needs of that kind. In terms of sustainability, we also had some recommendations on strengthening CCUS, that is for industrial decarbonization, enabling more circularity and more visibility in terms of taking on circularity across industries in sectors, and looking at financing, which is private sector lending for sustainable areas, in terms of giving them priority for areas such as EVs or EV charging, water management, waste management, and some of these areas.
Right, Mr. Goenka, those are some very interesting suggestions, and we'll come to that point about technology, giving technology in the hands of farmers, because there is, a lot of development also happening around that sector. So we'll talk about that in just a bit. But Mr. Sankar, do you think any specific sectors will particularly get a boost with respect to job creation?
I think apart from agriculture, which is spoken about, I think the manufacturing sector we expect will certainly get a boost. I think whether it's there are calls for bringing back investment allowance, as you've seen, there has been a slowdown on the private investment side, or lowering of tax rates, extension of the investment allowance. That if you set up a new plant, that section is expiring this year, so there has been calls for extending that to further boost investment. I certainly see there are going to be a slew of announcements as far as the manufacturing sector go, which we think is absolutely key for invigorating employment. As you know, manufacturing sector in India accounts for only 15% of the economy, and I think there is a huge scope to take this up to 20% plus.
So, Mr. Sankar, you're stating and you're expecting that a boost to manufacturing will be given a further push, and rightly so, because that has been a key theme for the government in the past few years. Let me take that point to you across to you, Mr. Agarwal. Now, support for the manufacturing sector has been coming in the form of PLI schemes, and we've seen how those have performed, particularly the PLI scheme in the electronics segment, for instance, and exports have been rather great as far as that particular segment is concerned. But if the government has to take the percentage of manufacturing from 17% of the country's GDP to 25%, what in your mind should the government do to accelerate the momentum of manufacturing? And is the government, do you think, ready to look beyond just PLI schemes as of now?
See, I think, from the government perspective, manufacturing sector is very, very important in its goal of Viksit Bharat. The Atmanirbhar Bharat, the Make in India is something which is very, very critical. And from that perspective, yes, PLI scheme has helped. And I think we might see certain expansion of certain sectors in that. Maybe like you were talking about electronics, how it has helped in the export of that. But, maybe what we might see and what we have recommended to the government is whether the PLI scheme can be extended to the components because ultimately what is important is the end-to-end supply chain, and whether we are making all of that in India. So that is something, what we have recommended, and steps like that will certainly help. But apart from that, to boost uh, the manufacturing sector, what is also important is the cost of doing business. How do we bring the cost of doing business down? How are we most efficient, from the perspective of capital cost, energy cost, in terms of labor and land, So those are some areas, where we believe some government intervention will certainly help in boosting the capabilities of the manufacturing sector.
Interesting point made, Mr. Agarwal, with respect to land and labor reforms, and that has also been the industry's ask since past many years to give a boost to manufacturing. Mr. Goenka, let me also take the point forward with you. What more can be done with respect to boosting the export competitiveness? Because remember, the Prime Minister has over and over again stated that it's not just about making in India, but making in India for the world. And we've seen the government has tried to do that in the past by exploring newer geographies, via FTAs, and even there have been proposals to bring down tariffs. But how can India then boost its export competitiveness?
Right. I think there have been continuous measures on this front. As you mentioned, FTAs is one excellent way to boost export competitiveness. Second is logistics as a percentage of sales, which has been higher at about 13-14%, whereas we want to bring it down to single digits. There has been the entire Gati Shakti Yojana, multimodal transportation, ways for within India, as well as then connecting that to the port, which will improve efficiencies. We have seen 2-3% improvement in that, and we hope to see continuously more and more improvement as capital investment and infrastructure investments come in. I think there is also some onus on entrepreneurs and business leaders to solve problems for the world. So if we focus on India, we will be serving the Indian market. But how do we solve problems for the world, innovate for the American, European, global markets? And I think that becomes important. But we also have a great tailwind of China +1 here, with duties coming in from US, I think, into China. This presents a great opportunity for Indian manufacturers to take advantage of the tariff or possibly new tariff regime that could unfold over the next few months.
Absolutely, Mr. Goenka, the China +1 opportunity, we'll have to see how that really plays out now, given that you have the Trump administration. So I think people across the world are waiting for policies around that as well. One final question to you, Mr. Sankar, before we wrap up this special programming. Now, let's talk about the AI push, because that's the big story that's playing out. And the Trump administration has recently announced to allocate $500 billion for Stargate. You do have China now also coming up with its own DeepSeek AI model. So hectic developments happening around in this sector, in new age technology. And India did approve an over 10,000 crores worth of India AI mission. But how do you think the government should move on from here if it has to compete globally in the AI and the new age tech segment?
So if you look at AI, I think the government is certainly cognizant of the benefits of AI on not just on the tech sector, but on the economy as a whole. And apart from this 10,000 crore announcement, you've seen recently the goings on in the AI world. I think there is again benefits to, we are not one of the countries that are sanctioned in any way, so we are not prohibited from having access to all the latest microprocessors. So I think there is certainly a huge boost on data centers in India. You've seen the focus on a thrust on that sector in India. I think the opportunity for AI-led investment, whether it's data centers, whether it's new language models, I think there are two sides of the equation, whether we work on the existing language models or develop our own. There are, I think, calls for developing our own. I think the opportunity is enormous, especially given the tensions between the US and China on this score. I think the government is cognizant of this. We will see more. We certainly hope to see some announcement in the budget in this regard.
Absolutely, Mr. Sankar, and there have been a lot of developments around AI in India as well. Lots of companies, IT companies and otherwise also developing their own LLMs. Some of them are very, very specific to Indian languages as well. So naturally and definitely there is a lot of interest around what will happen to the new age tech segment, around what's going to happen to deep tech, on data center, what's the policy going to be. Well, with that, gentlemen, we're completely out of time on this edition of a budget special programming. Thank you very much once again for joining us right here on ET Now.